Hey everybody, Cowboy here. We got a special treat. This is a clip from our live beginner lab, free to the public on YouTube, Monday through Friday, 8:30 AM EST for 30 minutes. And you're welcome to come and watch and ask questions. And today I created an algorithm, just like right before the audience's very eyes. So come check it out. At the bottom of the screen, you can see our website, www.algofactory.tech. You can also zap that QR code. It'll take you to our website. And if you stick around after the clip, you'll be able to see some more information about how to find us and what we do. Enjoy. I'm going to talk about indicators. And here's the thing. Here's what Trev asked, one of our private members. He said, show question, which means that it's a question for the show, which I always encourage our private members to ask questions ahead of time, and I can build a show around that. He says, one of the most popular indicators seem to be a function of price. Not one of. He says, most of the popular indicators seem to be a function of price. You have shown the value of FRVP, which is fixed ranged volume profile, and demonstrated VWAP, which is very volume weighted average price. But volume calculated trending indicators don't seem to have high popularity. I'm personally stacking EFI, which is the Elder Force Index, with my algo just because it seems closest to the raw data. What is your experience of volume calculated indicators on balance volume, money flow index, etc.? Okay, so well, FRVP is actually volume based, not price based. So the one that you talked about as a function of price, that's actually volume based, FRVP. That's fixed range volume profile. So that's not based on price, that's based on volume. And I use that one all the time and it works great. So that should answer some of your question on that. EFI, Elder Force Index, I've used before, but I've not used it a lot because I actually prefer the Elder Impulse. So, EFI, we can pop it on the screen really quick. Let me bring up the friendly chart, right? So I can do something that's a lot cleaner. Let's see, is that our friendly chart? That is not the friendly chart. Is this the friendly chart? Let's see here. I believe this is it. Yep, there's our friendly chart. And let me go ahead and clear out all the indicators and expand this. And then I'm going to go ahead and make all of the different screens, all the different time frames the same way by, where is this? Remove drawings indicators, look vertical. Okay. Interesting. It won't let me make this like the rest. So anyway, we'll just work on this screen. So EFI is going to be Elder Force Index. And I actually didn't know that was volume based. Like I said, I like the Elder Impulse because that is actually moving average based. And I like moving averages. But if I type on my indicators up here, I click on that, I type Elder Force Index. I click on your classic one. So you're going to have this basically, it is an oscillator of sorts, and the volume pops up, and then as it sloughs off, it goes back and retraces to the mean. I do like mean retracement indicators for sure. So with Elder Force, it is good in a sense because once you have a zero line cross, you can use it. Of course, I would be kind of stacking that with different indicators. For example, like if nothing else, I would be looking at the price action. I would establish a trend. So obviously your trend is down, lower highs, lower lows. You can even do this little guy here, right? So all the way down here, you have a downtrend without getting too detailed on that. So as you're on a downtrend, even with just price action, not looking at higher time frame indicators to establish that. If you're just going to look at price action, you're going to use one indicator. One way to do that is with Elder Force. Every time price pops above, every time the force index kind of reverts to the mean and even goes past the mean and then jumps back down, then there's a decent chance price will continue downward. So where do we see that? Well, we know we're in a downtrend at this point, right? So now once we've established a downtrend, which is basically there, at this point where I just put that line, a downtrend is established. Now we have a pop up there and we have a break back down here. So you could enter a short. You have a pop up here and a break back down right there. So you could enter a short. And again, you have technically one right there. You would have lost that trade. But another one right there, you would win that trade. And technically one right here, you would win that trade as well, depending on your risk to reward ratio. So you have 1, 2, 3, 4 winning trades, 1 losing trade using the Elder Force Index. Okay, so that's just a simple way. And the same would do as if we looked at an uptrend. And we, of course, we don't know the future here if we're really trading. So we do have basically an established uptrend right about here. So you don't know it's an uptrend until this point right there. So if you have the Elder Force Index retrace to the mean as it does right here and then pop back up, that's right there. Retrace to the mean, quick pop up there, retrace to the mean, pop up here, retrace to the mean. But here's the problem, your uptrend has been broken right here. As soon as the uptrend is actually violated right there. So you wouldn't pay attention to the next move up necessarily. So you have 1, 2, 3 trades, and 2 out of 3 are successful, right? Because you're just using price average to establish an uptrend on the Elder Force Index. Now, what you could do, and how we do things at Algo Factory, is we do multi-time frame analysis, right? So let me go ahead and apply the indicators to the entire layout. No, yeah, we'll do that. And then what we'll do is we'll add an indicator. Let's do this. Let's erase the drawings. Let's go ahead and make this just a 2-pane screen. We have a 30-minute and a 3-hour. So we have like a lower time frame, which is 30-minute, and then we have a higher time frame that is 3-hour. For those who are new to trading, what that means is that each of these candles represent 30 minutes of price action on the left, 3 hours of price action on the right. And I won't have time to go into this entire example because we are approaching the end of the show, but I'm going to throw a new indicator on there called MACD, Moving Average Convergence Divergence. And if I can find it here, MACD, there it is. This is a very common, simple indicator. And what we can do here is you'll see that on the right-hand side of the 3-hour, your uptrend is actually rather well established here based on how MACD works, right? You have this, we're not going to do an MACD clinic today, but let me go ahead and erase this Elder Index, and then we'll expand this. We'll erase this MACD because we're not using it on this time frame, and we'll expand this, right? So you have an upward trend, and that upward trend is going to last all the way until about this area right about here, really. Right about there is where the upward trend ends, and the upward trend begins right about here. So you know that because you have MACD. You don't have to worry about price action because here it's very difficult. I mean, it's not difficult. It's kind of obvious it's on an uptrend, but it's on such a strong uptrend. You don't know when it's going to stop, and you might be afraid to get into it because you haven't had any pullbacks. Well, in this case, you have an indicator telling you that. So you don't have to rely on price action, which might be more difficult to rely upon. And you see that the Elder Force drops below the 0 right here. And as soon as it pops back up, which is the next candle, you can enter. So you're using an indicator on a higher time frame to give you that high time frame bias. And that's how that works, okay? So that's what we do at Algo Factory. I basically built an algo and shared it to the public for free. You could take this algorithm and backtest it, and then I just gave away everything, right? Now, here's the thing about it, is that there's so much more than having a good algorithm. I talked about that at the beginning of the show. I can guarantee you, if you haven't really been trading or successfully trading, and you just take this little algo that I built and you go with it, you're probably going to lose your money. There's a good chance of it. The probabilities out there say that you will because you don't understand trading psychology. You have not had the experience to know how to do this from a psychological standpoint, nor have you learned how to trade like a business. Come over to Algo Factory, www.algofactory.tech. Put the URL on the screen. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.